Welcome to our channel. Understanding deductibles helps you balance premiums with out-of-pocket costs effectively. Follow these step-by-step instructions to set deductibles strategically. Step 1. Understand what a deductible is. The amount you pay out of pocket before insurance begins paying for covered services or damages. Step 2. Recognize how deductibles affect premiums. Higher deductibles significantly lower monthly premiums, while lower deductibles increase premiums but reduce upfront costs when filing claims. Step 3. Calculate how much increasing your deductible saves annually in premiums. Compare premium differences between deductible options to determine potential savings. Step 4. Assess your emergency fund and ability to pay the deductible if you need to file a claim. Only choose higher deductibles if you can comfortably afford them. Step 5. Consider your risk tolerance and likelihood of filing claims. If you have a clean claims history, higher deductibles may provide excellent savings over time. Step 6. Understand that different types of insurance have different deductible structures. Health insurance has annual deductibles, while auto and home insurance have per-incident deductibles. Step 7. For health insurance, evaluate whether the premium savings from a high-deductible plan combined with a health savings account provides better value than a low-deductible plan. Step 8. Review your deductibles annually and adjust based on changes in your financial situation, claims history, and risk factors. What made sense before may not be optimal now. Don't forget to like this video and subscribe to our channel.